It has been an extremely turbulent week for the cryptocurrency industry, with the market experiencing wild swings like a roller coaster ride, and a series of surprising events that have left users reeling with joy or despair. Hellman has summarized all the events that occurred this week, as well as the potential impacts on the industry. Following Silvergate's default last week, SVB and Signature Bank followed suit over the weekend, causing the stablecoin USDC to become unanchored due to Circle depositing 25% of its funds into 3 banks that went bust. This triggered market panic, and the details of USDC's depegging incident can be found below. As Hellman mentioned in the previous report, the market was likely to continue to decline, and the market has indeed confirmed this speculation, dropping below $20,000 on the 10th and hovering around that level. The sudden default of SVB triggered the USDC incident, which caused the stablecoin market to become volatile and confidence to decline, leading investors to flee to BTC/ETH. Additionally, the U.S. Treasury's sudden announcement of providing up to $25 billion in funds to support the Fed's emergency bank funding program, along with the joint statement from the Fed and FDIC, eased market panic, causing BTC to soar to a short-term high of $26,000, breaking its 4-month record. It was truly an exhilarating roller coaster ride, with some excited and others collapsing. According to CoinGlass, the number of people who experienced contract liquidation reached a record high of 86,596 this week, totaling about $370 million, with BTC liquidations alone accounting for about 80%, reaching $300 million. ETH also experienced a drop below $1,300 on the 10th. But broke through $1,700 on the 14th after completing the Shapella upgrade on the Ethereum Go early testnet. It has since returned to around $1,600. The upcoming mainnet upgrade, Shanghai, is expected to be completed in the second week of April, but whether there will be further delays remains to be seen pending official notification. Apart from market fluctuations, some events that occurred this week have also drawn serious attention to the issue of network security. First, the lending protocol Euler Finance suffered a lightning attack by hackers, resulting in a loss of nearly $22 million. On the 15th, Pools Finance was also attacked, causing its token to drop by nearly 97% in a short period of time. Security firm Hallborn discovered a zero-day vulnerability that affects over 280 blockchain networks, including Litecoin and Zcash, posing a risk to digital assets worth up to $25 billion. As the industry develops, security has always been an issue that cannot be ignored, especially for developers in terms of contracts, where any exposure to risk can lead to severe losses. Coincidentally, at the grand launch of ChatGPT-4, Coinbase executive Conor Grogan tweeted that he inserted a real-time Ethereum smart contract into ChatGPT-4, and the AI immediately found security vulnerabilities and demonstrated how hackers could exploit them. In fact, the contract had been attacked in 2018. This raises the prospect that products derived from AI for security checks could greatly improve efficiency and cost-effectiveness. Developing in this direction is an area that is worth exploring in depth. On March 11, following the collapse of SVB, the largest trading stablecoin USDC experienced an anchor slip, dropping to 0.8332 at around 4 p.m. after a series of official statements and market arbitrage. The situation gradually improved and returned to 1-to-1 on March 13. According to Circle's official website and Twitter, the total issuance is $43.4 billion, with collateral of $43.5 billion, of which 75% is invested in short-term government bonds and the remaining 25% is deposited in banks. Of the portion deposited in banks, approximately 30%, or around $3.3 billion, is held in Silicon Valley Bank, which has suffered a recent wave of bankruptcy over the past week. Out of the 7 banks where Circle has deposits, Silvergate, SVB, and Signature have already been liquidated or taken over, while the safety of the remaining banks, including Bank of New York Mellon, Citizens Trust, Customers, and New York Community, cannot be determined. There are reports that Cross River Bank will become Circle's new banking partner. From what we can see, although many people were worried that Circle would experience a situation similar to FTX, the company itself did not engage in any misconduct and had sufficient liquidity to handle any liquidity crises. The bonds that Circle purchased were also short-term, and several of them were already in the maturity stage, so even if they were sold at a discount, it would not result in significant losses. Additionally, most of the funds allocated to government bonds were reasonable. Regarding Silicon Valley Bank, SVB, and other banks where Circle has funds. Officials have already declared that they can retrieve the money from SVB, and even if the worst-case scenario occurs and they cannot retrieve the funds, other liquidity funds can support it. This is why USDC returned to its normal value of $1 on the 14th. Whale Alerts data shows that since last Friday, there has been a net redemption of over $4.5 billion in USDC, but the situation is still unclear, and it is unknown whether other banks that reserve funds will experience a run. It is also unknown whether this event will repeat itself. Although USDC has returned to $1, the impact will not simply end there. After the USDC depegging event, the market will be concerned about the stability of stablecoins, leading to a significant amount of redemptions or transfers to other assets such as BTC/ETH. Other stablecoin issuers will also be worried. Stablecoins are like the lifeblood of the market, maintaining capital circulation and promoting healthy market development. After liquidity is affected, the market will inevitably become dormant. However, now, due to the stablecoin issue, people are buying BTC and ETH for hedging, causing the market to appear falsely hot. The successive bank failures, tighter regulatory policies, the announcement of the February CPI, and the expected decision to increase interest rates by 25% will likely cause the market trend to decline again. However, the resilience of the entire crypto industry is beyond what was previously imagined, and the slow development of the underlying ecology will not allow the entire industry to be like a bubble again. If there are no black swan events, it probably won't drop too deep. This week, it appears that big institutions are starting to independently push for further integration between traditional finance and the crypto industry. Goldman Sachs recently submitted a patent proposal to the U.S. Patent and Trademark Office, proposing the combination of blockchain technology with settlement mechanisms. The patent was submitted on March 14, with the patent number being US 11-605143-2B, outlining the technical and computational requirements of using blockchain technology by the bank. The focus of the patent is on the technology behind smart contracts, which can be applied to various financial instruments, such as fractional reserve banks, insurance, bonds, securitized products, and margin loans. Goldman Sachs' move is part of its push for blockchain technology, with the global head of digital assets at the bank, Matthew McDermott, recently expressing strong support for blockchain applications in an interview with Bloomberg. The bank's private tokenization platform, GSDAP, was also used by Hong Kong to sell $102 million worth of digital green bonds, successfully shortening settlement times from 5 days to just 1 day. Meanwhile, some analysts claim that the blockchain sector is brewing a patent arms race, and Goldman Sachs is determined to expand its digital asset team and maintain its lead with new recruitment and blockchain products. National Australia Bank, NAB, has announced that it has completed the world's first cross-border stablecoin transaction using blockchain technology. The transaction involved converting Australian dollars into US dollars using a stablecoin, and then converting the US dollars back into Australian dollars. This represents a world first for a large financial institution on a Layer 1 public blockchain. The transaction was completed in partnership with Singaporean technology firm Parshare, whose platform enables real-time exchange and settlement of different currencies across countries and regions. The successful transaction validates Parshare's platform for safe and reliable cross-border transactions between banks, and demonstrates NAB's commitment to digital banking. This transaction marks the growing interest in stablecoins and blockchain technology in the global financial industry. Stablecoins have become one of the most important applications of blockchain technology, as they solve the volatility problem of cryptocurrencies by providing a more stable value in the cryptocurrency market. Stablecoins have also become an important tool for many companies, financial institutions, and governments for cross-border payments and remittances, improving the efficiency and security of the financial system. Hellman believes that NAB and Parshare's successful transaction sends a positive signal to the financial industry. With the continuous development and application of stablecoins and blockchain technology, they will bring more opportunities and changes to the financial industry. Stablecoins and blockchain technology will become the main tools for banks and other financial institutions in the future, improving transaction efficiency, reducing costs, and providing faster and more secure financial services to consumers. Whether it is from a regulatory or traditional financial perspective, it is clear that the entire crypto industry is slowly integrating into the real world, which is a positive signal. Although the future may still seem distant, we can at least see that more developments will make the crypto industry more easily and securely accessible in daily life. Filecoin, the world's leading decentralized storage network, recently announced the official release of its scalable virtual machine, Filecoin Virtual Machine, FVM, On the mainnet, FVM supports multiple programming languages and smart contracts, providing developers with a more powerful and flexible toolset to build complex and diverse applications and smart contracts. The release of FVM is part of Filecoin's ecosystem's efforts to provide a more powerful and flexible toolset to a wider range of developers and projects. At the same time, FVM provides an open, secure, and programmable Filecoin runtime environment, providing developers with better innovation space. The main features of FVM include scalability. FVM supports multiple programming languages and smart contracts, meeting developers' needs in different scenarios. Security. FVM is an open and secure runtime environment that protects assets and data security in smart contracts. Programmability. FVM provides a programmable Filecoin runtime environment, giving developers more flexibility. In addition to the release of FVM, Filecoin also provides new APIs and documentation, developer resources, and community resources to provide more help and support to developers. Furthermore, the release of FVM will promote the development of the Filecoin ecosystem and provide a more powerful foundation for Filecoin's future development. The release of FVM further advances the development of decentralized storage technology, providing more innovation and convenience for developers and users. Filecoin's support for smart contracts will provide more possibilities for decentralized storage and enable more stories to be written. We look forward to seeing what the future holds. Offshore RMB, CNHC, secures $10 million funding from KuCoin Ventures, Circle, and IDG Capital. CNHC has recently completed an A+ round of funding worth $10 million, with current focus on supporting use cases in Ethereum and Conflux, where Conflux plays a significant role in international channel development. Since 2021, it has been mainly used for transfer and cross-border trade settlements. Currently, there is a total circulation of $2 million, and the company plans to further expand into the Asia-Pacific market. Bitcoin Layer 2 decentralized finance platform Alex secures $2.5 million funding. Prior to this, Alex raised $5.8 million in seed funding in 2021. In addition to trading, Alex also provides staking, yield farming, and launchpad services. Currently, the capital invested is still primarily focused on the Bitcoin ecosystem, and there has not been significant investment from larger cryptocurrency investors into the Bitcoin ecosystem. Funding secured for compliance platform, Toku. Toku primarily assists blockchain companies with the compliance of token-related payroll and tax matters. Currently, its partner companies include Hedera, Protocol Labs, Gitcoin, and others. That's all for this time. We'll see you next week.